So if you can check at this certain point here, I had my zone, and then the market arrived there and touched and came back a little bit. So what I want you to understand is that what I like about zones is that when the market touches again, it reverses. You know, I don't know what's wrong with this trading view because it's kind of like slow. So let me check it quick. So if you can check, I had my previous zone here. And then when the market arrives this side, touched and then reversed a little bit. So you could have made few bars from this point to this point. So this is what I like about zone. Everywhere where I draw, when the market arrives, it touches and reverses. So it's not a difficult thing to understand. You just have to give yourself time in order for you to understand what I'm actually talking about. Because most of the people think like it's difficult to point zone. So, but nonetheless, today we're not gonna talk about zone. We're gonna talk about basics of the market. So we're gonna start with the trading type. So we're gonna go to the board. So on the board, we're gonna talk about trading time. Which times are more convenient to trade? So the most time that will allow you guys to trade or to give a short in the market, it's on the momentum part. You understand where the market has more momentum to follow the direction. So I'm gonna do this quick. Okay, so now we have our sessions here. And then we have our time here. And then we have indices which we can trade here. So basically I trade and I respect my timetable. There's typically the point whereby I know I'm gonna be trading at this certain time. These things have helped me to be who I am today. So for you to be who you wanna be, you can take one step by following my patterns, then you're gonna follow your patterns when you gave it a shot. You understand? It's like we all have the same strategy to make fire. You understand? But during the process, you'll come up with your own ways to make your own fire. But at the first, we all use the same strategy. So it's like the market. Just use my strategy, make some few bucks. Once you get to understand, you can start developing your own strategy, your own plan. So this sort of like a timetable, like a plan. So the session that I want you guys to trade, it's actually London session as a whole. London session. So I'm gonna write it as all as it says. So and then what time London session? You need to trade it at 9. At 9, you need to be like already having a trade. So let me say 8. So those times they allow you to execute a trade. You understand? There's a time whereby you need to execute a trade. They don't actually determine how long you can hold. Actually, 8 and 9 is the time whereby a trade should be executed. So the only thing that will allow you to hold it's your pure price action. So it's more convenient to follow pure price action. And then we're gonna say the other thing, the other time here during London session, it's 10. So we're gonna tell you what is it to trade so that you can know, if you can trade at this certain time that I'm telling you. Let me say here, let me say I wanna write this in a proper way so that all of us we can understand. Understand, between 8 and 9, you need to be catching your entry point. So this one, you just execute a trade exactly at 10, and then we're gonna tell you what is it that you're gonna be executing. So it's South African time, guys, South African time. So we're gonna say SSST. It's South African time. And then we're gonna say here you trade US30, Nasdaq, and German 30. And then here you trade German 30 alone. Sometimes you can mix US30, but I'll only say German 30. So this point, which are the risky part? It's risky. We're not saying if something is risky, you don't have to trade. You need to give it a try, understand? The reason we're saying risk is that you need to be aware what is it that you're dealing with, you understand? And then we're gonna say risky. But it has more money. The higher the risk, the higher the reward. The lower the risk, the lower the reward. The higher the risk, the higher the loss. Understand? So it's both sides at the end of the day, but you need to be willing. Once you consider yourself being here, you need to be willing to lose. So if you're not willing to lose, you don't go there. You understand? You change the channel. You change the channel. So nonetheless, now we're going to talk about New York session. What time to, guys, I always respect these times, understand? So during the process, this time is going to change, understand? London session will open at 8, and then you just minus everything by 1, and then German 30 will be traded at 9, and then New York, US opening will be traded at around 3:30. But then now we're going to deal with what we know. Actually, what we currently at. Even this one, it's a risky session, guys, but it has more cash, which is New York session. So New York session, you trade it at 16:30. You all know this time. If you don't know, you still new, you need to know. This is your timetable. You trade at this certain time so that you can make cash. Understand? You don't just trade everywhere anytime. Now you're gonna lose a lot. Understand? You need to be consistent with this time. You lose once, you win the next one. You lose, you win twice, you win for the day. Then you understand, always trade 2 times the minimum, because at half past trade there can be news released like CPI, consumer price index. You can consider yourself trading there, but always trade twice. It's either you're gonna lose once, you win the second one, and then sometimes you're gonna win 2 times. You understand? This is what I want. If you trade 2 times, you're not gonna lose a lot. So respect pure price action in everything that we're saying today. And then the other thing here, what you have to consider, which is the simplest part, is trading it, it's US30. It's US30. And we're not saying you don't trade Nasdaq, you do trade Nasdaq as well. Understand? So these are the things which you're gonna trade. Obviously, we know they are on a high risk zone, understand? But then You don't have to be afraid. You understand? High risk. So high risk, high reward. If you're trading at this certain time, no, for you to blow, it might not take minutes. You know, you can blow immediately once you start entering. You know, I'm going to talk about blowing in it because I want you to be motivated. You understand? Don't always think like when you enter the market, you already Bill Gates. No, you're still gonna take those losses. Those losses have to build you. You understand? During the process, you can't just arrive in life. The next thing you're winning. Every day you're winning. Like there's no one who ever came in this industry and said, I just entered and started winning. You're lying to yourself and you're lying to other people. We know where you started because we have the same journey, but we're not using the same route. You understand? Your route might be faster than mine, but at the end of the day, we're going to the same destination. Going to the same destination, it's life. Obviously, not all of us are gonna be forex traders, but for me, I can't say not all of us, but if you wanna be a forex trader, I will tell you that be a forex trader. Because you need to behave like forex traders. I'm not talking about lifestyle. On trading, if you can see how they trade, you're gonna understand that you're still playing with your own feelings. You need to trade. You understand? You don't need to play games. You need to trade. You really need this thing. So you have to make sure you get it. Understand? So not all of us have the knowledge. So guys, now we're gonna talk about common patterns. Understand? Patterns which I use. So I'm going to change this color to black. So the patterns which I use, first thing first, I'm going to talk about a rising wedge. So this pattern, they don't just happen anywhere. First thing first, this pattern, they just don't happen anywhere. You just get a rising wedge. You know, every pattern happens on the zone, like I said last. So we're still going to talk about pattern because I want this thing to be on your head. You don't have to forget. So there's a rising wedge. So if you can check about a rising wedge, it's diagonally, but the way it's drawn, the shape of it, it shows that the market will do what, will drop. It's not a correction impulse. It's not a correction impulse. It's a rising wedge. So at the end of the day, you're gonna put your sales here, and then put your stop losses here, and then you take profit at the bottom. I can't be teaching you guys. These things I'm gonna be teaching you for like 3 months. Understand? You need to catch these things. Sometimes learn to draw these things without you going to the market and looking for them. You understand? So that you shouldn't lie to yourself and force things. I can draw this thing. I'm not reading from anything because these are the things that I'm using. And then now I'm gonna go to the market and go look for a rising wedge. We both of us gonna look for rising wedge. You know why do I like zones? Check what is it that it's doing. Zones. Guys, zones are the most perfect thing which you should use. Understand? But we're gonna show you how to apply zones in a minute. So now let's look for a rising wedge. My zoom is, my trading view today is too slow and I don't like it. You know, these things have moved, guys. Those things have moved. So let me check if I don't have metaphor here so that we can use metaphor. Yo, this thing today, it's playing out and it's playing with my emotions now. I don't want to lie. Let me check my metaphor. Yeah, guys, so we back, you understand? So I made a plan. I used another browser. If you're wasting our time, we switch. Understand? Yeah, you see, this one is what I want. Okay. I think Chrome, it's not doing as we want it to do. So we're changing the channel. So now we're on Nasdaq. We're checking what is it that we see. We're looking for a rising wedge, understand? So as much as I said, we're gonna be looking this thing together so that we can understand them. Understand? And then we're checking for a rising wedge. I do see a proper rising wedge here. I do see a proper rising wedge from this trend to this point here. And then from this point to this one. So it's a proper one, no lies. Took it from the bottom, came here, played around, played around, played, created a double top, then went to the bottom, retested, went for TP. Simple as ABCD. Same applies to this position. We can actually conclude this as a rising wedge. It's the same thing. So went from the bottom, played around here, then went here, then fallen. So this patterns, they are the most difficult to catch, right? But then you need to be vigilant. If you can check even here, we had the same thing. So we moved from the bottom, came here, came here, came here, came here, came here, came here. And then the next thing went to the top, TP hit. So it's simple, guys. You know, with no lies, it's simple to spot the certain patterns. Let's check them on call as well. Yo. I can't say this one here is, let's do this. Well, that's the nice thing about trading, guys. You need to to check these things in the wayside. Now I can't say it's the one. We're leaving the current one now. We're gonna check the other ones. So we had one here. This is what I like about the market, trust me. This is what I like about the market. So same story even here. Impulse, it gave us a correction. So you need to understand when we say impulse and correction, impulse doesn't mean it can take the same direction. Now, you need to understand the pattern you add. Same story. So guys, this is a rising wedge, as we said. So let's check the question basically based on the rising wedge. So this thing at the end of the day, we know it has to do what? Move like this. And then who's sending the links to, guys, you're not serious. So guys, someone just enters here and then starts sending links and doing all those necessary things. I don't know. Let me try to remove this person. So guys, let's respect each other, please. How often do rising wedges happen or break? Like if you see a rising wedge, there's no way it wouldn't break. You understand? If it doesn't break, you didn't see a rising wedge. Those patterns are like this. If you see a towel bottom, it doesn't become a towel bottom. It actually means you didn't see it. Understand? So now we're gonna talk about a towel bottom. So what I like about towel bottoms, and nearly in most cases, even the rising wedge, they happen on the zones. So they do respect zones. So here you're gonna enter your buy here, and then you're gonna put your stop loss here, then your take profit will be here. So here it's your SL entry. This is your take profit. You know, if you can study the market in a way that I'm teaching, you're gonna be a killer. In most cases, the market here manipulates. Don't go easy on it because it created a towel bottom. It manipulates. So once it manipulates, you create your support, your stop loss after. In most cases, we like putting it on the tail, but it has to depend on your account. Then after you enter a buy. Simple as ABCD. You go into the chart again. You're going to look for the same thing. Nazo. If you can check. So this one, it seems like it's on H4. We're gonna go on H4. The more you don't see a chart clearly, you don't need to zoom it furthermore. No, that chart is at the wrong position. First touch, second touch. You enter your entry. Once it comes back here, if you're a pro, you're gonna enter it somewhere here. And then after you enter, you put your stop loss here. Your entry point can be inside, and your take profit will be here. So every time when the market breaks the support, what you know is that the market has to come back and do it and retest. It won't retest easy. Don't go all in. Nah, it will retest, manipulate a little bit, but come back, push to the top, came back. You can see here it created a rising wedge and then came to the bottom, went up, created the bigger one. So at the end of the day, I felt like gold will still drop. So let's look for another double bottom. We can't have a single one. So here we had a diagonal one. There's a diagonal double bottom. You can see here, there's a falling wedge, but the bottoms matters as well. We had one, and then we had two. So let's check another index, or yeah, let's check Nasdaq, right? Double bottom.
Mr. Ninja,
For sure.
I've got a question. How do you confirm the second leg of the double bottom?
So okay, depending on which time frame you're looking at. So if you're looking at H4 and a daily time frame, when the market touches the, let me put it here, when the market touches this point, obviously you're gonna draw your support based on your previous touch. When the market touches this point, that's when you're gonna enter based on the daily time frame and H4. But if you're on a smaller time frame, which like M30, you always wait for rejection, because obviously they know the theory and the concept of scalpers. Scalpers are always on the smaller time frames. They don't focus on bigger time frames. So let me show you. Let's look for a double bottom in the smaller time frame. Okay, so we have a double top. So in most cases, you wait for the candlestick to close. Once the candlestick closes, that's when you're gonna do what? Enter your cells. You don't enter if the candlestick haven't closed with your direction that you wanna take. You see, this was a bullish candlestick, and you actually wanted to take what? A bullish direction. That's where you enter. Your confirmation has to come from your candlestick taking your direction. If you're taking a bullish, I mean, you're gonna take an entry after a bullish candlestick. If you're taking a bearish, you're gonna take an entry after a bearish candlestick. So actually what I mean is that if the market keeps on selling and you're on your support, you don't just buy. You wait for the market to give you the confirmation. You get it?
Yes, yes.
Yeah. So I'm gonna go to US30 now and then check what is it that we have this side.
Sure, Ninja, go forward or something.
No problem.
How do you avoid the stop hunt, or how do you catch them?
So the only way you can avoid stop one, first thing first is not to put stop losses. And then the second one is to wait for the market to manipulate other people's stop hands, then you enter. Actually, it means if there is a stop loss, it means there's possibilities that the market can hit the stop losses. So you just wait and look at the market. If the market manipulate the direction, you enter your trade. Actually, in most cases, I used to do this. When I see a buy, I wait for the market to manipulate me. Once it starts manipulating me, that's when I enter my buys. That's how you can avoid it. So even here we hit at our bottom. Let's touch, second touch, gone. So USDT, I like it because it respects zones. You understand? It respects zone. If you can check, even the point where it's turning, there's a zone here. It's a simple zone. Understand? It respects zones. Before it can pass somewhere, it has to respect. Understand? So in most cases, that's the most things which you guys should focus on. So here we hit a double top. So we're gonna go for impulse and correction. So the market is built by impulse and correction. So even double bottom, double top, rising wedge, head and shoulder, those things are built by impulse and correction. So impulse and correction is like this. So in most cases, hence I always say the shape of the market will guide you in which direction you're gonna take. So you wait for the shape of the market to guide you. So if the market is like this, there's no way you're gonna see the market selling like this or like this. So impossible, you understand? So it's not like it's a framework. It's what I have seen. You can't find it like this. What is this? No one knows, you understand? So the market, if it gives you something like this, it will do this. Correction and impulse movement, understand? So let's go to the chart again and look for correction and impulse movement. Everything respects correction. So correction and impulse can happen horizontal or diagonally. Understand? So we can start whenever or wherever. So we can start here. So here we had a correction. So if you can see this candlestick, they are too small and they are playing around. It's like we're not having a movement. But if you can go furthermore, let's say M5, we technically having a movement. So if you don't see your chart very well, you need to reduce the time frame. Understand? It means at the point that you open your time frame, it's not at the same point. You see the candlesticks are playing, you be like, this candlesticks ain't moving. In the other time frames, they are doing what? They are moving. So you always have to do that. So this is an impulse and correction. So impulse and correction, what I like is that you can either enter on the inside the diagonal support and diagonal resistance, or you can enter once it breaks out and closes outside. Once it closes outside, we fly. So I'm gonna go back again to 60 minutes and look for the other one, correction and impulse. Everything in this life respects correction and impulse. Even if I were to enter Bitcoin as a whole, you're gonna find it respecting correction and impulse. So simple to look for a correction and impulse. Even this movement here was a correction and an impulse based on the structure where it comes from. Understand? It came from an impulse movement, corrected, and then gave us an impulse movement. That's a good payment. And then let's unzoom the chart so that we can see it very well. So even at the certain point here, we had a correction and an impulse. This was an impulse, correction, impulse. So in the market, we go impulsively, correction, impulse. The same way, even here, we had the same story, impulse. Impulse, correction. So now we're gonna go to another thing. So you see, we just like browsing, we're not actually like saying this thing has it, but we know that it has the correction and impulse. So we're gonna look for it. So it's an impulse correction, impulse movement, simple as ABCD. If there's an impulse movement, don't think like the market is tired, now it will turn. The market will never get tired. The market is always ready to move. You can see impulse correction, impulse movement. So it's more, at this certain point here, yes, you can enter your buys here. Clearly confirmed, put your take profit here. So the bigger the impulse and correction, the bigger the amount that you're gonna back. If you can check on a daily time frame on gold, we do have an impulse which is on a correction which is on a bigger time frame. The day it will respect, people are gonna be begging. So the market moves impulsively and correction. So when you see a big movement, please wait for a correction. Don't just jump in the movement that it's moving quick, because you might blow your account. Because they'll always make a correction to blow. And in most cases, people oppose the direction on the correction path, and then they blow their account. Don't risk all your amount. Impulse correction, impulse movement. Impulse correction, impulse movement. So you can train these things like this: impulse, correction, impulse movement. The bigger it becomes, the higher it pays. So now we're gonna, okay, let's check the messages. Can you please advise on the time frame when analyzing, time frame in squeezing, or what is the best time frame to any time? So when you analyze your chart, you start from a high time frame. I'm still gonna get there, but when you analyze, you start from a high time frame to a lower time frame. If you wanna look at a shape, you wanna see it, this is a down bottom and you don't see it very well, you're on an H4, go to H1, maybe you're gonna see it well. If you don't see it on H1, go to furthermore smaller time frames. If you don't see it well, if you can go to M5, you're gonna see it well, then you're gonna trade that market based on M5, not based on H4. The H4 will give you the whole structure of the market. Understand? So now let's go to third touch theory. So what I'm trying to give you here is the third touch theory. So I'm gonna do this. So what I want you to understand is that the market can go up. So this is a diagonal zone. Remember we said we're gonna talk about diagonal zones, and then touches here, and then goes up again. At least you are below, you need to be looking for buying opportunities. You're above, I mean. So once it touches here, you take your buys. You put your stop losses here, and then you can put your take profit here. At the top, you see we don't have a third touch, so you can buy here. So guys, this thing is directly proportional to the selling side. And then you put your take profit here. Okay, so let's remove them. And one, two. On the third touch here, you're gonna enter your cells. Here, you sell. In most cases, it will manipulate you, but at the end of the day, it will sell. So always wait for manipulation. So manipulation should be your friend from today. So we're gonna start with okay, Nasdaq 100. I'm gonna start with Nasdaq 100. We're looking for third touches today. So these things, guys, it's not how to analyze the chart. Don't get me wrong. No, it's not how to analyze the chart. It's the concept. What is needed for you to analyze the chart? Those are the basic things that are needed. So now we want to look for third touches. What is it that third touches does in the market? So we're going to start from this point here and then take it to the point here. Only third touches, guys. Third touches matters. So here, even the fourth touch gave us an incredible movement. That's what I like. But basically, we know why. It actually came back to the same position, repeating the previous movement. This one here. But check on the third touch. Once it touches, it did what? Boom, went straight to the top. This was your third touch. It went straight to the top, but it came back, created a downward bottom. When the market comes back to your same direction, actually, you know what is it that it wanna do? It wanna pay you, then back. Eat the cash. So even if I were to take this third touch from this point here to the top, this is a zone, right? And then to this point, I have to create it exactly the same it is. You see? So this was my first touch, second touch. Check on the third touch. It bought, but it bought a little bit. You understand? But what I want you to understand is that there's no way it wouldn't buy. So there's a third touch theory. The other one is this one. It's first touch, second touch, the third one gone. So it's simple, guys. Let's go to H4 now. Third touches matters. You see, the next thing it did what? It bought, right? So we're gonna take the same trade, the same trend to the top. Check what is it that it did. It took it to the top as well, because this is a zone. It's a diagonal zone, you understand? So it will always respect a diagonal zone. Same applies to this point here. I don't want you guys to cram the market. You need to understand these things. You don't just sell anywhere and call yourself the goated. Nah. Understand? If you can check here, we have a resistance at this point here. We do have a resistance, and it's your third touch. So it means it's our first touch here, second here, the third one it's here. Check what is it that the market did. Dropped heavily. So the third touch matters, guys. The third touch matters. So now we're gonna go to DAX. Let's go to USDT first.
Sure, Ninja.
Sure.
So I have a question here. After the third touch, where do you put your take profit?
Basically, when it comes to take profit, it has to be, in most cases these days when we trade, we put a single take profit. Let's say I were to enter here, I'm gonna put my single take profit here, and which is wrong. You need to have your first take profit here, the second one here, third one here, the fourth one there. But then the first one here, you need to beg. The main thing is to cash in. Understand? You need to have a money target depending on which direction you're actually entering.
Okay.
Yeah, because take profit depends on the current market. What is the current market we're analyzing? That's your take profit. Your take profit should come up from the current market. So if you can check here, same story. We have your first touch, the second touch here. So on Monday, I can say I can advise most of the people to take buying opportunities. Don't worry when the market is going down. It will still go up based on the analysis.
Ninja. I cannot believe. Yeah. You made breakfast?
Understand? So this is how the market has to move.
Ninja.
Sure.
You're speaking about three types of take profits or two different types of take profits. I'd like to know, how do you place three different types of profits in one trade?
So when it comes to profits, right, it has to be points whereby the market can reverse. So this one can be your third take profit. So it has to be a point whereby the market can reverse, and then this one can be your second one, and then your first one has to be here. So this is your rejection. This is the point whereby you know that if the market can hit here, can reverse and go to the bottom. So you put your take profits there and here and there.
During a trade, how do you do it?
Oh, during a trade, you need to modify. You click your position, then it will say modify. Then you first thing first, you go to the trade, and then you put your horizontal line, you copy the coordinates, you go to modify, then you paste those coordinates, or you can draw on the book, then you write those coordinates.
Give it time, you'll learn to speak up. Yes, I say that.
I hope you got me. So, like I said, you shouldn't worry about what is it that the market doing at the moment. What you have to be worrying about is what is your analysis saying. Understand? So here I want to show you some.
Still running support. They're on cover. Come by is going down tonight. This is ATF steel. So we're on standby until they make the call, then we do the bust, and ATF takes over the credits. Now, Scheller, you were Yan, Wilson, you were Marner, and Stone.
Simple as ABCD. So on Monday, you wake up, you enter trade, you buy USDT. Hold. One play, no gain. Okay, we said we jumped DEX by the third. Oh, this man is buying beautifully. So it's obvious that USDT will buy. So in most cases, if you can check, let's say if you're to take a trend here and then put it here. This is your first chart, this is your second one, this is your third one. Forget about the manipulation. It will always be there. See, manipulated, came back inside and then sold. Okay, I wasn't supposed to remove that thing. Let me remove everything. First, second, third one sold. First, second, the third one bought. So this is the simplest ways to trade the market. First, second, third one sold.
Sure, Ninja.
Sure.
Can you be able to point out the dead touches or the double bottoms during a zone?
Come again.
Can you be able to see the dead touch or the double bottom during a zone, like inside a zone?
Yeah, it's possible if you can wait for the market to create the double, I mean the double bottom, yeah. But the third touches, once it touches, you enter.
Even though it hasn't touched the zone.
No, once it touches, it has to touch the zone.
In order to confirm whether it's the third touch theory.
Yeah. For it to be the third touch, it has to touch. And the reason it's touching, right? And the reason we know that it will reverse is because it touched, went down, touched again, went down. So on the third time, it's a 90% theory that we know that the market will reverse because you did that 2 times. On the third touch, it's obvious you wanna pay me. So it's always advisable to enter on the third touch because the second one you might not see it.
Sure. Because now you don't have your zones, but you're using your trend lines in order to put out the dead touches.
Yeah. But at the end of the day, those third touches, they're gonna be your zones. Understand? Because at this point here, you can see this was my previous zone. This is my current zone here. You see, this keep on being my zone. So your third touch will always be your zone. So now what you're gonna do from today is that you're gonna have your zone and then you're gonna have your diagonal zone.
Sure.
Yeah. But at the same point, in most cases, it will be the same zone that you're supposed to enter your cells here. But you will learn because you thought the market can reverse here or there. But because of the diagonal one told you that this point here is too strong. You have a diagonal and you have your current zone.
Sure. So you can use the zones and the trend lines at the same time.
Exactly. Hence, I said this is kind of like basics. Everything that I'm teaching you, it's applicable in one thing. You will need to know all of them and apply them in the same thing.
Okay, thank you, sir.
Hi, Ninja.
Yeah.
Yes, I would like to ask if what time frames should we use the dead touch rule?
Come again.
I would like to know if can we use that touch rule in any time frame or in the higher time frame only.
Okay, so when it comes to zone, so I want you to learn some kind of trading that this one it's more profitable and it requires patience. So what I do is that when I trade Monday to Friday, it means I use all this time frame. I use daily. I mean, I use H4, H1, and all of those stuff. So we don't have any specific time frame that you can use, right? But what I like about H4 daily and H1, they are major ones. You understand? If I can draw a diagonal trend, I'll call it a zone, because I know that once you hit my trend, I'm gonna reverse. This is a, this is a zone. So you can draw. That is why when it comes to H1, I start saying there's a support. I mean, M30, I start saying there's a support, this is a support to M15, because in my mind, I don't want to forget that these things, they're just manner. I can just pass within 2 minutes, and then the next thing I'll be saying, support and resistance doesn't work. So what I will advise you, you start from a higher time frame to a lower time frame. You need to understand the strength. I drew it from a higher time frame. When you touch it, you need to understand it will have the major respect from a higher time frame.
All right, thanks. Yeah.
Okay, no problem. So since we have everything, for now we're gonna analyze the chart. You understand? We're gonna use the zone and the diagonal zone, so that we can see where are we exactly going. Already on USD2, we saw which direction we actually taking. You understand? As I said, the market should go to the top, whether or it wants or it doesn't. The point that it has touched, it's wrong. Understand? When I say it's wrong, I'm not saying it wasn't supposed to touch it. No, it's a trap for it. Understand? If it touches this point, we execute a buy. So it touched. As much as you can see, it's going to the top. Hence, I'm saying Monday, enter, buy, hold. So we're going to start analyzing this chart. So today we're going to start from a daily time frame due to the diagonal support we have. So always start from a higher time frame. So we're going to do every basics that we do. So what you do, first thing first, you create your highest point. This is your highest point. So this, like when you enter a chart, this is what you do. You understand? You create your highest point, then you create your lowest point. Not saying that the market has to reach the lowest, your current lowest point. Not saying the market has or is a must for you to reach here. Nah, it's not a must. You understand? This is USDT. They've been buying. So what you do, let me take this thing to the bottom. You can create a trend from this point. So the reason I like using H4 is because I don't create this trend, the daily one, understand? But at the end of the day, you need to create them. It's allowed. So what you do after all, you create your trend here, diagonal trend, this point here. I want this one. So remember last week it was only zones, right? So now we're giving you diagonal zones. So diagonal zone, actually, it's something that actually says where I turn, I can turn based on the diagonal zone or on the horizontal zone. So now I'm going to push to H4 and then create the zones. So when you check, you see it's a nice trend. You understand? It's a nice trend. You're inside a trend. You're inside a trend. It's a proper thing. You understand? This is what I want you to show me, guys. I'm only having like 2 people who are showing me their analysis. I want you, all of you guys, to show me. I'm going to open the private group, send analysis every day so that others can learn and ask you, how did you get this thing? And tell the person how and when and why, so that everyone can understand and eat from what we know. Understand? So at the end of the day, if you can check here, so now I'm creating my zones. So these are my zones. It's the point where the market reversed and gave me a big movement. Reversed, 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 reversed. So these are my zones. You know, it's the point which I know these points are strong. So what is it that you do? Still go to the smaller time frame again. You do the same thing. So don't let this chart confuses you, right? When I'm looking at this chart already, I know what is it that I see. I know this is from this point, this one is from this point, and then I do this. So if you can check at the bottom, I don't have a third touch. That's where manipulations start acting out, understand? But at the end of the day, at least you are above your zone. You're looking for buying opportunities. You don't forget the theory, you always follow the theory, right? So, but then because we're above 2 zones, we're looking for buying opportunities. Then we go to M30. This is our last point. What we do this, and then we create the support. There's a support for me. So this is the point that I know that I'm going to be entering my buying opportunities, and then I'm going to create my resistance. This is the point. If I break, I know that I'm going to enter buying opportunities above here. Retest. The market always comes back and retest. But at the end of the day, what I like about you guys already know that there's what we call third touch. This is our third touch here. The market will touch and do what? Come back to the bottom. So touch here. The next thing it does what? Come back here. To get more power to do what? To break here. I'm not controlling this thing. I'm going accordingly to my analysis. Understand? So this is how our USDT is looking out. You understand? This is what I'm expecting from USDT to give me on Monday. So at night we take buys. You see here we still have zones which you need to respect and go to the top. But at the end of the day, I'm going to show you on Monday, we're going to be somewhere here during the day. The next thing you see the market popping to the top, coming back down. The next thing we're at the top again. So based on our analysis, this is what we see from USDT. So if you have any question about it, you can ask it. Can ask, guys, if you have any question, confusion, ask so that we can actually balance that. Because if you don't balance your mistakes, you're going to always continue doing the same thing.
I've got a question.
Okay.
How do you deal with impulsive trading, like funding and blowing, psychological?
Okay, funding and blowing. You
Like
mean on
in
the
the
same
same day,
day or different days?
In the same day, like same day. I once funded like 5 times in a day. I blew all accounts.
Yeah, I know the part. I once did that. And when I say I once did that, I mean like maybe Monday I did that. Yeah, I don't want to lie. It's part of the emotions. I did that on Monday and I funded like, I think it was 4 times to 5 times and I kept on blowing. So the only way you can deal with that, right? You know, like when it comes to emotions, you need to understand yourself. What was the reason that made you to keep on funding?
I think it was probably revenge or greed. I just
Yeah.
felt like the market will go in my favor, you know.
Okay, and then with the time, okay, when the time when you funded at first, you saw the direction, right?
Yeah, I saw the direction.
So you didn't want to accept the defeat. And then you're
I didn't want to accept that the direction has changed because I saw that it was actually on US States. I saw that this thing is selling, right?
Yeah.
But then I kept on believing that it's gonna buy. So I kept on entering the buy.
It's kept on blowing. Yeah, I know the part. So the only way you can deal with that, right? How much did you fund?
I think on the trading, it was 325. I funded 1,000. I took it to 30,000, and then I took out 10,000. Then I blew the 20,000 like that. I just kept on funding and blowing.
So you were trading with the 20,000.
Yeah, 20,000.
Okay, you know what was the problem?
Mm-hmm.
You took a 1,000 and made a 20,000. Then remember your psychology that you're using on 1,000 can never work on 20K. So you're supposed to do a simple code. You're supposed to do the same thing. Take a 1K and make 20K again. Take a 1K, make a 20. Actually, your strategy from
that's what I did.
Yeah,
that's what I did. But as I was funding the second time, I knew that okay, I need to fund 1,000 in a day, right? But then second time funding, I funded like 2.5. You know, I kept on increasing.
And obviously when you increase, it's because when you funded 10K, let's say you funded 2.5. When you blow 2.5, you know that for you to recover 2.5 with a 1K, it will take time. So you needed to fund more in order to recover everything. So that's actually, you need to have a plan on that. You know what is it that you have to do? You need to stick to 1K, fund 1K. You're perfect with 1K. There's no need for you to fund a lot of cash. You fund 1K, and then once you blow your 1K, you just accept the defeat. That's the only thing you can do.
proper thing.
Yeah, that's the only thing you can do. Most of us in this industry, we passed that. I'm telling you that I did that on Monday, but I'm telling myself that I can't do that again because I have to do the thing that I didn't do that day. The thing that I did that day was that I was under pressure. I wanted 200K. So what I did, I funded 40K. I blown it. How many times do you guys see me trading with 40K? You never see me trading with 40K. So the psychology that I'm using to my smaller accounts can work to my higher account. So I need a bigger psychology to manage a bigger account because I'm gonna be mad there once the market doesn't take my direction. And the thing that I did is that I didn't want to accept the defeat. Funded 70K, took the same direction. Did what? I blew. So that's the market. We all have the same emotion. We pass the same thing. But at the end of the day, if you're gonna catch yourself catching feelings like forex traders, which motivate you, just know that you are on the right path. Don't let those mistakes dismotivate you. Those things you need to manage them now because if they can happen when you have more money, you're gonna blow your whole amount trying to revenge the market. So at the end of the day, I felt like that was the good question and it needed a good answer. So now we can get another question, guys, if you do have another question.
Yeah, I have a question.
Yeah.
Okay, when it comes to that in the morning around that 9:30, is there always news that is always released? Because
On what
I did
time?
see like that in the morning.
Or at 9?
Yeah, like 9.
At 9 is just
9:30.
London session opening. So we know that when the market opens, like the candlestick, the new candlestick H4 at 9, it will have a more momentum.
Because I'm asking, I may see a kind of like a flag and everything is there and break up the trend line and structure. I was like, okay, enter by. And once it's around that 9:10, and it will reverse like mad with
At
an
10,
impulse move.
at 10 there's German 30 fundamental.
Okay.
So it affects US 30 and German 30. So don't be surprised when US 30 start acting up at that point. So it's always advisable if you're on profit, you just lock.
Okay.
Nasdaq Ninja.
Yeah.
How do you analyze the news at like 4:30?
Okay, basically when it comes to the news, right? Today we actually traded at around, I think, 5 after the news. Yeah. So when I analyze the news, okay, fundamental, I think we're gonna talk about it next week because I have to be using my phone and show you guys how to do fundamental. I have to use my phone and the PC at the same time, showing you basically on the phone and then what is it that you have to do on the PC. Even if you don't have a PC, I mean other concept I'm gonna show you on the PC. So can I answer this question next week?
Okay, my brother.
Yeah.
Sure.
So guys, now we can analyze another thing, which is
Who
gold.
is another me?
Like I told you guys, gold will buy. You can see it topping. For you to enter like lot sizes here, you can make more money, guys. You don't need bigger movement. So what you do here, you create a higher one. And then the lower one. So guys, the last one will be Nasdaq, then we'll be done for the day. And then we're gonna meet next week again. So if you can check, this is currently my structure. This is like a correction. Let me show you this point here. How we see a big movement. So if you can check, this is, understand, the end of the day, we need to push to the top, but we don't know when, but we'll keep on moving inside the zones. And then go to 240 and see what is it that we have. At this point, we're gonna create our zones. At this point, we know we had our zone here. And then we know we had our zone here. So don't be surprised when the market reaches here and sell. You'll be like, why is it selling? No, bro, you need to draw zones. You have to be there. Those are the point whereby we know if you touches it, the market will reverse. So on gold, I can advise most of you to use zones because the market always respect zones. You can see, so I think I've drawn most of our zones that we needed. So you can only trade with you having zones only. Touch, you enter, you oppose a direction, do all those things. And then we're gonna take our trend here. First thing first, here we don't have our third touch, and we do need our third touch. So like I told you last, that here we had a diagonal trend, which can do apply as this being a retest. Like we said, the market will sell and then can retest at the certain point here. Sometimes you don't have to forget what you didn't respect in the past because it will happen in the future. You see, so it respected here. So at the end of the day, if you can check one way or another, we can have our support again here. Based on this point and this point and this point, for you to pass here, it will take time. But in the future, this will be our third touch. It can be here or here. And then what you do here, you reset your chart. So as much as we above this point, once we close on the bullish candlestick, I guess you're gonna be taking bullish trade. So you're gonna put your take profit here. Simple, no hard work. Then you're gonna go to 60 minutes and then look what is it that you have. Then you have a simple movement. What movement do you have here? You have an impulse correction, impulse movement. Simple. And then now we're gonna go to the other one. We're going to NAS 100. Still the same thing. Remove everything. Today, remember, going to daily time frame. You always start from a higher time frame so that you can see the whole thing. You don't force the trend, right? If I throw a trend here and then it doesn't touch, I don't force it. So I'm gonna put it here.
Ninja.
Yeah.
Do you have to understand the candlestick theory or the candlestick analysis in order to make an entry?
Yeah. Those are part of things that you need to understand. So in my point, I only use pin bar and engulf only, but you can have as many as candlestick that you can, because I have like a colleague which has like many candlesticks and they work. So it's more important for you to understand candlesticks.
Sure.
So the PDF that you can use, it's I think it's in the Bible candlestick.
Can you share the link of the PDF, or can you share the PDF on its own on the group?
Yeah, I'll share it.
Thank you.
So now we're gonna do what? We're gonna reset the chart. So if you can check now, I have to fix my touches here. They have to be valid. I'm gonna put them like this, and then after I'm gonna do something like this. Trust me, guys, keep on buying Nasdaq and USD. You're gonna see where we're going. There's a retest here. We're still gonna be pushing to the top. Now go to H4. When I see this kind of movement, I can give you a direction, a long-term one. And then this is Nasdaq, guys. Remember, I started by trading Nasdaq. So what you do here, you can create trend inside a trend. Then you take the other one here. Once you break this one, it's over with Nasdaq. Then you go to, okay, let me give you the direction for this one. For me, it's going there. And then you go to 30 minutes. So it means you know from Monday, what is it we're working at? Don't be surprised when we take buying too much. Feel like we're focusing on them. This was like a head and shoulder. Then we push to the top. So this is what we're focusing on, guys. So nonetheless, guys, let me answer the question from the
Ninja.
Yeah.
What's the difference between a choppy market and a range bound market?
Choppy market. Okay, I feel like a choppy market, it's a market which doesn't move for like, even if you create a trend, trends are not there. Let me show you when was a choppy market on NAS100, but it will be something which was last year that I saw. I think the only time we had a choppy market, it was during the president elections.
Okay.
I'm gonna show you the trend. The trend was like, it wasn't valid. The touches were many. This was the choppy market. So if you can check the trend here, obviously we are losing, because it's even skinny. The other thing is that it moves here to there, and some of the traders are holding. So this was a choppy market. So a range market, it's something like this. Something like this, something like this. So this one was it was like it always take time. If you can check here, it's only 2 weeks, but here it was like for the whole month. So it's at that point.
Okay, thank you.
No problem.
Ninja.
Yeah. No
Like
problem.
when you analyze, usually you analyze on Sundays again.
Yeah.
Like now you're going for weekend then.
Yeah.
So I want to know, like, do you analyze all of them, like German 30, NAS, and US 30? Ne?
Yeah, I do analyze all of them.
So that means, so on Monday, maybe when you start trading, you check all of them where there's opportunity, or like how you balance it actually. Yeah.
I check US 30.
Yes.
So in most cases, what I know, like US30, I like US30 because it respects, So I check US30. Once I find that it's on a good setup, I only check US30 only. I no longer check the other ones because they affect each other. If I check the other one, I find it's a sell, I might not enter the buy that side. I'll enter US30 alone.
Okay, because that thing was confusing me, bro. I try to balance, but I can't balance. So sometimes I see you send a signal on US. Maybe I was busy on Nasdaq. You send on US 30. So because usually when you send a signal, I do my analysis. Ne?
Yeah.
So when you send a signal, then I get the reason why you say sell or buy. You see.
Yeah.
Sometimes when you send a signal, I take time. I see maybe it goes. Maybe say buy. Instead of going for buy, it goes down a little bit. Then that's where I took a buy. Then I make more profit on that way. Yeah.
That's what is needed. You always have to confirm.
Yeah, because sometimes you can't just sell a signal, then maybe you just buy. You don't know why you buy, so you must have a reason to why.
Let's say
Yeah,
a signal, I can execute one trade like 0.1 and see what is the air. So everyone has to do that as well.
Yeah, because it helps me a lot when you send a signal. I'm on the laptop, then I can see what's happening there. Because sometimes you send a signal, it doesn't go that way. So people, they start buying. After they buy, then they blow. They come and say, "Hey, your signal this and this and that." You see.
Yeah.
So another question. Let me say on the third touch, because usually I see you trade on 30 minutes. You confirm on 30 minutes or.
Yeah, 30 minutes. I feel like it's also high because inside it there's other time frames like M5, M15, and M1.
So, oh, okay, maybe let me say give you a third touch and you're going for buy. So after a touch, you wait for that candle to close, or what do you do?
I'm gonna go to M5. Once M5 closes, I'm jumping in with the bullish candlestick.
All right. Okay.
So like you have to compromise. There are point whereby you need to use like smaller time frame, even M1. There are point whereby you need to use, you know that M1, if it closes with the buy, gone.
Yeah.
Yeah.
Okay. All right. Thanks, man.
No problem. So guys, I think other questions. Yeah.
Sure. I just want to find out how do you determine the entries for long-term trading?
Okay, the only way you're gonna determine long-term entries now is
Yes.
you have to have a long-term analysis. You get what I'm saying?
Okay.
Like if at this point we have this analysis, right? We give this analysis as being a buy. So this is your long-term analysis, right? You need to enter here and then you need to hold until this point. But at the end of the day, you know, it will play around.
Yeah. Oh, okay.
Okay, guys, no problem. I think for today's lessons we're done. I'm gonna send the video into the Telegram, and then if I didn't add you in the Telegram, I'm gonna add you now.